welcome back. So today we're going to be going over the markets as well as some dividends. So with that being said, let's get it. Okay, so excuse me. All right, so Ethereum appears to be on the rise. I told you guys basically about the target for that last time. The target based on the weekly here is, if this really is a bounce, is looking like right around 6,600. Again, that is not a Fibonacci level target even, so it could go much, much higher than that. I do want y'all to keep in mind that we are in August now, and if the cycle timing remains true, then we only have roughly about, let's see, August, September, October, November, December, about 5 months left in this cycle. But a lot can happen in a short period of time, and I'm actually going to show you guys something else very interesting too here in a minute that kind of coincides with the end of the year being quite bullish for crypto if it does happen. Again, got a possible bear flag formation appearing here on the Bitcoin dominance. The sell-off would be huge. It would be down to 55%. So Ethereum theoretically should at least push 2 all-time highs during that move, and the altcoin should start to pop off pretty substantially. And again, Bitcoin's doing a whole lot of nothing, so that kind of ties in with a potential alt season being right around the corner. And I can just kind of show you guys what this bull flag looks like if it is going to play out. Again, we're seeing Ethereum possibly forming a bull flag, which is very bullish for Ethereum and the altcoins, and the Bitcoin dominance doing the opposite. So there is some kind of confluence there. And another reason why I think the crypto market is about to explode up higher in the coming months is because of this. So it's been a while since I've looked at this, but I did want to show you guys regardless, because this is very important for risk on assets. When the Fed cuts, usually risk on assets go much higher. It's only if the Fed is cutting because it's an emergency and they have to do it because everything is going to SHIT. Only typically in that situation would I expect the markets to actually sell off, and as of right now, we're not seeing that. So in this case, in my opinion, it would be a bullish event. So we have pretty much a guaranteed rate cut here. Another one, not quite a guarantee, but pretty good probabilities here on a second rate cut in October, and then even a third rate cut in December. So that would be fantastic. If the Fed would do that, we would have a pretty mega move in crypto, I would think, because the last big move happened when the Fed cut rates. You guys pretty much saw that for yourselves. So, okay. So NASDAQ is looking good. Go look at the weekly time frame. Again, it kind of just really looks like a pullback in time to me. It's pretty much what it is. Again, we're not even overbought on the weeklies, so I think we're good. We still have a lot of room to run. But if there is a pullback in time, before we even get to overbought, that's actually a good sign, because that means that the markets can run even further. So you guys can see we just recently got oversold on the daily time frame. I actually missed the opportunity to buy here, so if you guys took advantage of that, congratulations. I missed out on it, unfortunately, because I was not paying attention, but I will certainly be paying attention going forward from this point on. So, and again, we are in that kind of sort of bearish seasonality right now. So yeah, that's a pretty substantial pullback, about 5%. That's a pretty decent amount. So it's possible we could get another pullback. I'm kind of thinking of this green zone, 22.3 to about 22.5 on the NASDAQ. It just makes perfect sense, because that's the next major support level. So, about another 4 or 5% over the next 6 weeks or so, I kind of would be expecting that move here. Okay, so enough of that. One last thing to show you here is that basically the VIX is good. We're pretty much right around that bull bear break-even point on the 50s and the 200s. Okay, so talked about that, about the Fed watch tool. So it's been a while since we've gone over the portfolio. Not much has really changed here. I will tell you guys that we have put on some more puts for TSLL, because the whole AI narrative, right? If AI really is going to, over the next 5, 10, 15 years, going to be fully indoctrinated into society, stocks that are heavily into AI or anything autonomous or robots, space travel, any of that stuff is going to be extremely valuable, in my opinion, to own things like that. So we're talking about like your Teslas, your Amazons, Googles, anything to do with AI, quantum computing, robotics, any of that stuff, even like cures for aging or different biopharmaceutical advancements, cures for other things and whatnot. Those will be, in my opinion, very, very valuable to own. in the next decade or two. So definitely want to get some more shares of those. You guys can kind of see the summation of everything that's going on here. Swing trade still the same. Still got the 400 shares of TSLL, so nothing's really changed here. Okay, last but not least, the dividends. All right, so we got SPYT here, 32 cents. Again, it pays pretty much about the same as it always pays, and this is more of an income play, not so much a growth ETF for those of you guys that are into passive income investments. Okay, QDTE this week, 24 cents, which is pretty good. We'll go to XTTE, which is actually the one that we have. We got rid of QDTE because the whole NAV erosion thing. The XTTE, in my opinion, is probably the best one for growth and income. So 25.5 cents here. And last but not least, RDTE, which is 26 cents, and that's pretty good. Okay, the most recent one here is going to be GPIC. I can do GPICs as well for those of you guys that have it. So 44 cents, which again is really good. And the overall price performance of both GPIC and GPICs has been substantially profitable over the last couple of years. I think if you guys had bought GPIC at inception and GPICs, you'd be up like 20 to 35% or something like that. It's insane. Okay, so 36 cents on GPICs here. Again, pretty good. There is a month-over-month increase. You guys can see more or less it has increased over the last 5 months since that kind of low we saw earlier this year. I'm not going to go too deep into these. Those of you guys that are into the Yield Max ETFs, you probably have already seen these week over week, but I'll point out the substantial ones that I think are probably worth pointing out. So YMAG, you got about 8 cents for the week. YMAX, 14.5 cents. And yeah, Tesla has dropped quite a bit. I mean, that's not really surprising. You know, if it pays out a huge dividend, but the stock is mainly going sideways, that's going to create NAV erosion. Like I said before, these ETFs are great for income, but the best case scenario for these is basically just straight up and to the right for the stock. So that way you get the maximum price appreciation and also passive income. But here is all the different ETFs that they have, and some of these are on rotating 4-week schedules, so we're not going to see things like Coney and Misty and stuff like that right now. Okay, so last one here is JEPQ. We're not going over JEPI because I don't actually have that one. So 44 cents here on JEPQ. It is a substantial drop over the last couple of months, but again, this one's not very consistent. So, but the overall total return for this ETF has been pretty stellar. So, I can't complain too much on that. I'll just take a quick look at the 3 I was telling you guys about before. So you got JEPQ here. And again, if you guys have Robinhood, this would be easy for you guys to do. You just click on the ETF you want, go to the max time frame or whatever time frame you're looking at, and you guys can see all time since inception was about 10%, but since the low, that would be, let's see, minus 20 to about plus 16. So that would have been about 35% return if you had nailed the bottom back in 2023. Obviously, that's very difficult to do. So if you're a dividend investor and you want to try to time bottoms and tops, you really need to be able to learn technical analysis and understand it. And that takes a while. So some investors, they just invest for the passive income. They don't care about the price, and that's fine. But if you want to have a little bit more finesse with it, you'll have to learn some TA. Okay, so GPICs, sorry, basically since inception here is pretty good. We're pretty much back at the highs before the whole tariff thing. Yeah, you'd be up plus 30% just in price alone on this one, not including passive income. So pretty huge return over the last couple of years. Okay, and last one here, GPICs, also very good, plus 27.5% over the last, the last 2 years, basically, not even 2 years. That's a pretty damn good return. You throw the dividend in there, you're talking like almost 40%. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.